Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices kind of holding steady where we went out on Friday near that 1200 line, miles away from any key moving averages, but getting closer to the 50-day moving average. Recall that the gold prices haven't traded above the 50-day moving average since April, so it's been a while. Looking at technicals here, we got the lows that we recently put in near 1165. That's kind of the near-term support. We haven't really tested that since the one day we did in late August, but it seems to me that the market is waiting for something. It's coiling, and it's looking for possibly some kind of catalyst to either launch it back towards the lows, which I think we'll find out later when we talk more about positioning, or a rally higher, because that 12 line, after trading about $225 range this year, it is very near the bottom of that range. As we just mentioned, back in April was the last time it traded above its 50-day moving average. And the dollar came in much weaker today. We did see other currencies outperform on their basis, looking at the pound and euro. But I think specifically the dollar seemed to lose some luster. The trade talk continues to kind of wear and tear on the dollar. Did not really adversely affect gold prices today. Yeah, they didn't go there either. So the dollar, while it has been the catalyst for the lower gold prices the latter half of this year, we haven't seen it affected as of the last several sessions. So right now, dollar not effective, gold prices holding steady. Let's bring in those positions. CFTC reports that the speculators added massively to their shorts last week. We expected them to probably hold off with gold prices trading steady. It didn't look like there was a big position shift, but there was. And right now, the speculators haven't been this short since December of 2001. Market looks to probably see continuation of the dollar strength, whether it's resolution with China, whether it's continued expansion of the economy and Federal Reserve policy getting more hawkish. But ultimately, gold loses its luster based on higher interest rates or higher equities or whatever you want to look at. And that is why we're seeing speculators jump back in. Recall, it was just not too long ago we broke the barrier, taking net positioning net short, which helped aid in some of the down trade over the last month and a half. But ultimately, it hasn't really added any fuel to the fire. We'll have to wait and see if that happens. Right now, gold is really watching the dollar. It's going to be watching policy, and it's going to be watching interest rates, all of which will have big moves come the end of this month. We are just right now in the middle of September. We have the end of the month. We have FOMC meet. That'll set the table for the fourth quarter with forward guidance and possible rate hikes after December of 2018. So right now, gold prices hovering at 1,200, looking for a catalyst move. This is Todd Colvin coming to you from the floor of the CME Group.